Hey guys, so I'm going to do a trade recap today. It's going to be the trade recap on the long on the Dow Jones, except I made a mistake and really I didn't enter when I should have. My fault, we live and we learn. So I'm just going to go straight into it. I'm going to go straight into the trade that I should have taken. Okay? So, which was an awesome trade. So, daily time frame we're bullish, okay? We inverse this fair value gap, we're holding this fair value gap down here, and we're in an uptrend, alright? Easy. That's it on the daily. That's all you need to be doing on the daily. No bullshit. Just 10 seconds in an uptrend or downtrend, some fair value gap, some liquidity, bang. 4-hour time frame. So, high resistance liquidity over here. We want to take it out. We're also in the seller's zone, so we had to be mindful of that. And I did not want to long into the seller's zone pretty much anywhere over here. You know what I mean? Anywhere over here. I needed a retracement. So like down here is where I would have entered. But there was also setups up here, and it's something you can't be taking while we're in that zone. You need to wait for a retracement at least, bare minimum, which is what I did. So 4-hour time frame, which was also the entry time frame. Seller zone. Relative equal highs. If I hop on the 1-hour time frame, you'll see we actually made relative equal highs and then we hit it later. So yeah, you can see relative equal highs here. We failed to make it. 4-hour fair value gap, resistance, equilibrium. Equilibrium of this whole move, reason being, it is the unbalanced, actually, technically, it would be that. The unbalanced move. The unbalanced move, okay? So, marking EQ, you don't want to mark from the low to the high, you literally want to mark it from the unbalanced zone, okay? So, which part of the zone is imbalanced? Like, in this example, this whole move would be the not balanced. But then, you could find something else where it's like, for this here, you would say this one. That's the equilibrium of this move, because even though there's no fair value gaps here and it doesn't really count, because we're just been ripping to the upside, I wouldn't say EQ of this, I would say EQ of this, because you can see we came down here, we rebalanced this, we're on the 4-hour time frame, don't forget, I'm sure there's a 1 hour something in there, rebalance that, and then continue coming down. So marking equilibrium, you do have to be a little bit discretionary on it, but it's pretty easy to get. Whatever you think is the unbalanced move, so in this case, that one. Resistance, and that was it, equilibrium. Daily's bullish, 4-hour. We came out of the seller zone. We dropped quite heavily on the 1 hour time frame. Oh, well, heavily, I mean quickly. Sorry, like that's a bad word. We dropped quite quickly. And then we dinged our entry and we went up. So, yeah, I wouldn't be going long in like anywhere up here. Pretty much anywhere, like honestly, as dumb as this is going to sound, anywhere in or above that box, I would not be going long. Because it's just not enough of a retracement. For my sake, it was enough of a retracement, that's why I took it. But that was a mistake. 1 hour time frame doesn't matter because the entry was a 4 hour, by the way. But my mistake was wanting an entry at the unmitigated 1 hour fair value gap, which is this box here. Whoa, 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 whoa. Bang. So I wanted an entry hitting this 1 hour fair value gap. Reason being, greed and a better risk to reward. So obviously 1 to 3 there, 1 to 2.3. Okay, big difference, big difference. And if I dropped it down here, I mean, yeah, I'd have to make a bigger stop. So not good at all. Yeah, not good at all. It was purely greed and not good enough. I think the risk reward while I was up, because right now I'm just skimming over it. While I was up, it was a 0.5 difference. So that's $10 on the account, risking 20. And I was greedy. So yeah, should have entered at EQ, getting dinged. But instead I wanted to wait for this 1 hour fair value gap. But it doesn't even matter because the entry was on the 4 hour. 4 hour resistance, 4 hour high confluence fair value gap equilibrium. Bang! Awesome draw on liquidity. We're out of this seller zone. We're getting that retracement. We are bullish, high time frame, great entry. But instead we did dumb things. I'll show you the 1 hour time frame, the 1 minute, sorry. And I messaged my mentor pictures as we were going up. I was up right up until we hit TP1. I'll go into TP1 in a second. But I was messaging him saying, bro, watch this not hit my entry. Watch this not hit my entry. Like I could tell if on the 1 minute time frame, if your strategy is if your strategy is high time frame and you're going to see some candlesticks like this on the 1 minute time frame, that is bullish. like in this case, it's bullish. I used to trade 1 minute candlesticks. Instead, I just limit order at equilibrium, which is still I'm forward testing. Actually, I'm not gonna say anything about that. But yeah, so because let's say you do enter off 1 minute time frame, which is what I used to do. My entry would be here, 1 minute break of structure. That would have been the entry. It would have been something like that, and then TP1, TP2, blah blah blah. So that's why I like to just limit order here. Yeah, sometimes you would get a better entry if we keep coming down. Break of structure, bang. That means I would get a better entry. I'd be entering here instead of here for longs. But in this case, it was actually worse. But I'm sure it averages out to just be equilibrium. That's why I'm just going to limit order there. That was the OG strategy, but this is still the OG strategy, just a little tweaks like that. So yeah, I was messaging him like, yeah, no, we're done. We're gonna go up, and then bang, rip to the upside. And if I did limit order here, bang, would have secured $20, and then full TP would have been hit today, the following day, which is today. TP1, very crucial. This is a very crucial part. Pay attention. So we came down here, right? Forget this 1 hour for Vega, doesn't matter. We came down here before coming up here. It was very important that we came down here first, because if we had come up first and then hit our limit order, I wouldn't have entered. If we had come up first, we have 1 hour BPR here. Now this is a possible point where price might respect. Okay, we're in the seller zone. The high time frame could flip bearish. The reason I still went long was because the 1 hour fair value gap slash BPR is a really good draw on liquidity, and we have a really good draw on liquidity up here. My point is, we're up here. We come down. We come up, forming that fair value gap. We come down, hitting the entry, and then we come back up. This could just be a lower high. It's something you have to take into consideration. Now, looking at the high time frame, your 1 hour time frame is the early signal time frame. You'll just never know. You'll just never know until it actually happens. So my thinking was, okay, we might form the lower high here, but we're still going to hit TP1, which is what I needed. That was my thinking. And I was correct. So we came up, hit TP1, which is literally on that green line right here. And that was it. But I had to keep in mind that this could have been a possible reversal point for us to keep going lower. Lower high in this seller's zone. We could start going down. Who knows? But yeah, that's it for the trade recap. And then full TP was up here, which is the very close equal highs. They're all very similar. 0.02% difference. But we came down here first, targeting forget the BPR, the 1 hour fair value gap. Who cares about the BPR? 1 hour fair value gap, and that was that. So good draw on liquidity there. Now the Ethereum trade, a bit of an update. I just exited. I exited. Why did I exit? Because we were just chopping. Yeah, so we're chopping around. I don't want to have bar of it anymore, to be honest. And if we hit all TPs, awesome. But just not going to do it. Not going to do it. It's my first crypto trade I've ever had done. So I'm just going to back test it. Journal it. Need to get the energy drink soon. Just going to journal it and leave it at that. But yeah, it's unfortunate we had to leave. I think I've paid, so I risked $20, and I think I've paid $1.50 in fees. So yeah, that's nothing. But yeah, imagine I was risking like $1,000. You know what I mean? Like it adds up. That would be like, if I was risking $1,000, if I was risking $2,000, it would be $150. So you know what I'm saying? Like it's a little bit of money. It's a little bit of money. So what would that be? $1,000 would be $75. So yeah, for me it's just not really good enough, and yeah, I wouldn't want to be in swing trades just for it to be chopping around for days on end. Anyway, it's okay. We literally got out just a tiny bit in profit, but then accounting for the fees, we made like nothing. So yeah, that was it. That's it for the trade recap. So yeah, my mistake. I did not make money on this trade. Wherever we entered down here, but it's okay. We live and we learn. But that would have been the trade, and we would have won, which would have been awesome. Right now, we are, if you don't count the crypto, if you don't count the Ethereum long, the Ethereum short, sorry, if you don't count this Ethereum short, we're 1-0 on the NQ long that we took. I'm pretty sure it's NQ. Don't know. Well, thanks for watching, guys. Have a good one. Let me know what I can do better. And yeah, see ya.